We started this programme talking about CPI, big market event of the day, I suppose, although you rained on it slightly, Mark, by telling us it's not going to move things perhaps today. What are we going to be watching for? It's all about the dollar for you. Yeah,
it is about the dollar. But I'm going to take a few seconds of my time just to push back. Worst nightmare is a little bit harsh. And I actually didn't answer Kriti's question. I just threw it back at her. On the dollar, I think the reason is today on CPI, I think that ultimately, not in the short term, but over the next week or two, whatever we get today is going to weigh on the dollar. Because the bigger kind of context for this CPI print today is the pressure on the Fed from the administration. And so if we get a soft print, well, then the pressure on Powell will absolutely double down and go extreme, and we'll really see that front end really move lower. If we get a high print, then, you know, sure, short term we might see yields bounce, dollar bounce, a bit of a squeeze, risk version. But then everyone's going to go, there's still pressure on the Powell to cut rates, despite the fact that we're seeing that inflation come through. So either way, the backdrop story here is that the Fed is being pressured to have too easy policy relative to what inflation should justify, and that's bad for the dollar.
Sounds like the Fed's not independent.
The Fed is not independent, and that is the problem for the dollar. And that's why I think, you know, a lot of what I'm hearing in the market at the moment for the last couple of months is constantly people trying to buy the dollar bottom, you know, catching that falling knife, and can constantly predict a dollar rebound. I just don't see any dollar rebound getting any real legs. I mean, there can be short-term ones, but, you know, we've been having a massive debate over the last week or two on the team about where euro dollar can pull back to, and I'm just like, I don't see euro dollar getting to 115 because the whole world is waiting to buy it below there. So I think, you know, any squeeze in the dollar just is going to be faded so quickly.
What is the swing back risk here? Because I think 6 months ago we were talking about parity on euro dollar. There's a question here of if there is such a consensus kind of short dollar trade at the moment, and you do see that knee-jerk reaction, what does that look like? What's the floor on that?
I don't think it goes far in terms of that kind of rebound, because what happened is in the positioning, and you know, a lot of the positioning metrics are not perfect, but you take the CFTC positioning as one kind of guide. We've gone from extreme longs in the kind of the market that tracks to shorts. Now, the largest short in several years, but it's still not very short. But the bigger picture is reserve managers, that the world is overexposed to the dollar still because people bought US stocks unhedged on the FX side. So there's still a lot of dollar selling to meet any kind of rebound, and that's why I don't think it goes very far.
Stocks, earnings season is upon us, Mark. Does that cut through before tariffs really cut through?
I think that's the bigger driver right now. Because no one knows what ultimately gets implemented on tariffs, we're going to push playing the tariff story much closer to the deadline. So I think the short-term story is, you know, we talked about it the last week or two, you know, even as we approach the initial July 9th deadline. I think, you know, that the fiscal tailwind is positive. Macro data is good. I think it's short-term bullish, not major gains. I think it's going to be a rocky kind of gains, but I expect stocks to be higher again a week from now. Earnings will probably help that story because of the low bar. So I think the short-term picture is bullish for stocks, but I think we're probably getting towards the more difficult territory, and by August we'll probably see stocks weaken again, I think.